Hi everyone, welcome to another video. Today we're going to be looking at how to manage sales taxes in QuickBooks Desktop. Recently I did a video on sales taxes, so if you're not comfortable with sales taxes, you don't understand the general premise or concept of how it works, I'm going to be leaving a link below in the description so that you can watch that video. So the agenda today is first of all going to be to look at how to set up and activate a QuickBooks file with the correct sales taxes. Then we're going to look at how we can set up additional sales taxes. Then we're going to enter some bills and invoices and see how we're supposed to allocate sales taxes correctly. And then finally, we're going to look at how we can generate report on a monthly, quarterly, whatever basis. All right, so in QuickBooks, we're going to go to a new company. And we can hit Express Start. We'll just fill out some fields that are needed in order to get the company activated and going. Company name, industry. I'm just putting whatever financial services. I'll create a fictitious accounting firm just for the purpose of showing you this part, how it works. You can enter your business number, but of course it needs to be an accurate real business number. For GST or PST. PST if you're in a province that has sales taxes for the province. You can just skip that part if you want. But the important thing, the very important thing, is to select the province that you're in. So what that does is it's gonna force QuickBooks to activate the proper codes that are relevant to whatever province it is that you're in. So then you can go to your item list and you'll see that you have sales taxes codes already populated. And I'll show you how these work. So just by default in QuickBooks, there's a section called Group List. And what you'll find in Group List is different codes. So different sales taxes are coded with different letters, basically. So GST only, basically 5%, will have the letter G. If you're in Quebec, which is the file I set up, which was a Quebec file, you'll have the Q for the QST. That's the old QST actually. You'll have the S. So the S is the new rate. What happened in Quebec was they ended up changing the Quebec tax because the Quebec tax was taking tax on tax. They were calculating QST on GST. Basically, brief, you should be only selecting S as the default tax if you're in Quebec. Z is for zero rated, E is for exempt. And you can look at the video that I mentioned previously about sales taxes, which explain what zero rated and tax exempt are. But essentially, those are sales tax codes that you would use if there weren't any taxes on the items that you've selected when you're entering either invoices or bills. So I'll show you how this works in a second, what you should be inserting in any type of data entry that you do that includes sales taxes. Alright, so let's take a look at how we're going to be creating invoices using sales tax codes. I'm creating a fictitious invoice to a customer called customer 1. I have my items set up. So let's pretend we're going to invoice them $100. So the business is registered for sales taxes. I'm pretending I'm in Quebec, so I'm selecting S. If I was in Ontario, the default code you would see would be HST. So you would select HST and that would automatically calculate the 13% in Ontario. So I'm just showing you here the calculation that it is correct. If you select S, it does that calculation for you, so it saves you the time of doing that. I'll create another invoice. This time I'll make the amounts different. So you see I select S. 200 times 5% gives you 10, and times 9.975% gives you 19.5. So I know that that's right. I'll create bills also, because like I mentioned in my other lesson, actually let me go back, because what I want to do is, this video is being filmed or recorded in April. I want to do a tax return for the first quarter of the year. So from January 1st to March 31st. So I'll make sure that the dates are on the 31st. I want to make sure they're in my first quarter. So that's something to keep in mind also, as your dates. And I'll look later on how to issues with dates. So now I'm just going to create a bill. Let's pretend it's at 150. So after tax it will be 172 if you're in Quebec. I'll allocate it to whatever kind of expense, you know, call it travel expense. And I'm selecting the S code. So that's the data entry part. Now, what I want to show you is, as a result of doing that, we're allocating the sales tax amounts, and when we generate a report, we see that those amounts show up. So on our report, line 101 is sales, line 106 is ITCs. It's basically GST that's going to be refunded to us. And I'm just showing you where the numbers are coming from. So if you double click those lines, you can actually see which invoices they relate to. So our first and second invoice, one had $5, the other had $10 of GST. Same thing with the QST. The QST we had 9.98, and then we had another one with 19.95, which makes up the sum of 29.93. That's money. That's money that we're gonna have to pay to the government. So like I explained in my other video, whatever amounts of money that we charge is money that we're gonna have to give to the government from the GST we collected, and whatever amount of money that we were charged, that's money that we'll receive from the government. So now let's look at how to create an item. And the reason I want to look at that is that it's real nice that we have our S code for the Quebec sales tax. But what if we're dealing with a lot of HST? I mean, our business could be invoicing HST. That's very possible. We might be receiving bills that have the 13% HST. So essentially what I'm trying to create is a shortcut. So I create a HST code. One is for the amounts collected. That comes from our invoices. And then we're gonna have to have the same kind of setup for ITCs. ITCs are tax credits, basically the GST that's gonna be credited to us, the receivable amounts on bills. So bills from vendors that may charge us 13% HST. What's important in these sections is that where it says tax rate, we put a percentage. If we don't put a percentage, that has an implication. Basically, it's gonna use it as a dollar value, which we don't want. And we gotta select the right code, 106. Once we fixed up our items, we're gonna set up the group code. What that means is whenever we're gonna do any type of data entry, we're simply gonna type HST. At the moment we don't have it because we're in Quebec, it didn't show up as a default. We'll select taxable. And what QuickBooks wants us to tell it is, for tax on purchases, what do you want me to grab? So we wanted to grab the HST ITC that we created, and we wanted to grab the HST for the sales, for the amounts collected. Now we're properly and correctly set up. So if we create an invoice, we'll just run a test to see what happens. Any random amount, like we can do $100. The key thing here is, if we're invoicing HST, we're going to select HST, because now automatically it'll give us the 13% at the federal level, which is what we want, right? So if I calculate it, if I use my sales tax calculator, $100 in Ontario, the HST amount, it ends up being 113. So that's what QuickBooks gives us, and we're very happy with that. Now we can even enter a bill from a vendor. We'll say that he invoices us or she invoices us $113. So you see, we got to change this. Now we got the right pre-tax and the right tax. Let's have a look at what kind of impact this has on our reports. So I'm just checking, they're all there. We have our previous information from the 2 invoices we created with only the GST and QST, the 5% GST and the 9.975 QST. So let's look at a tax agency report. So this is basically the report you'd file. So assuming we're filing on a quarterly basis, and you can also export this to Excel. Which is nice. So this is my report with the HST items. I ran a report previously without those 2 HST items. So I just created one invoice of $100 plus the HST and one bill of $100 plus the HST. And I just want to show you what happened. What happened is on the collected side, it went up by $13, right? Because what I'm highlighting here is the $15 we had collected minus the $28 that we have now, because we added $13 more from the HST on our invoice. Same thing with the bill. Okay, so now I'm going to show you how to actually file it. So you'll hit that File Tax Return button at the top. And look over here, I'm just highlighting the fact that you owe money. There's a payable. That means you collected more, and then you actually are going to get refunded from whatever you were charged from your vendors. So what I like to do is I like to save. I like to save my file. You can print it or convert it to a PDF. It's just gonna save that report. You could even do it before. You can do it before you actually file it, or you could do it when you're filing it. And even after you filed, there's a way to retrieve it, which I'll show you how to do in a second. I'm just gonna save this on my desktop. And you can choose, do you want to pay now or pay later? If you hit pay now, if you hit pay later, it'll go in your payables. So it'll sit in your payables. If you hit pay now, it'll ask you like if you want to pay by check. So yeah, I'll say yes. I don't even have a bank set up because this is a fictitious company, so I'll just put whatever. I got my bank set up now so that it can credit the right account. Ministère du Revenu, we're in Quebec, so that's who we're paying. Like I mentioned in my other video, in Quebec, at the provincial level, they collect also the federal level. And we're done. Okay, so everything we did is fine, but it was sort of a quick and dirty type of way. I want to spend a little bit more time showing you what are some of the things that I would normally do just to anticipate, or rather to be better prepared for an eventual or possible audit. And whenever governments will audit sales taxes, they will almost always usually ask the same three things. One is a copy of your 10 or 15 largest invoices. They're gonna want an actual copy. Scan it and send it to them. Also, they're gonna want the 10 or 15 largest bills that were invoiced to you by your vendors. They'll want a copy of that also. And they'll also want details from your general ledger. So for the purpose of showing you what I like to personally do, I'm gonna use a fictitious company, but this time with a lot more transactions. Okay, so this is our other sample company. We're gonna double click on the balance amount. And we see a whole bunch of transactions. That's why I wanted to use this other sample company, is we have a whole bunch of transactions. And we see the amount of sales taxes on our invoices. And I just want to custom this. You're gonna customize by amount. And what's that gonna enable us to do is sort everything, sort all of our invoice amounts, sort all of our invoices by amount, excuse me. So you see we're descending. And now for the ITCs, the bills we were charged, it's from lowest to highest. So I just want to export this for the purpose of archiving this. And like I said earlier, when governments audit, they'll ask for the 10 or 15 greatest or largest invoices and bills. So what I like to do is see which ones are going to be my biggest 15. And what I can do is, when I'm going to archive this stuff, usually whenever I generate some kind of report, I save it in my computer along with the sales taxes that I file, which I'm going to save. I'm going to save a copy of the 15 biggest invoices. You don't need to do this, but I personally like doing this because you're ready in case of any eventual audit. You have everything already organized, and then it's a matter of just pulling it out, touch it once and get it done. So these are coming from our purchases. These are the ITCs. I just want to highlight what the 15 biggest ones are. And I can even pull those out, scan them, put them in a folder, and I have them ready. It's a bit extra work, but it's good to have. Regardless though, I want to have this listing because the CRA, or Revenue Quebec, if you're in Quebec, is going to ask you for this Excel sheet if you get audited. So it's nice to have it handy. I'm just highlighting in yellow. And I also want to do the same thing with my sales, because they also want to see your sales. That's line 101. Line 101 is your sales, and there's a little glitch sometimes in QuickBooks. For whatever reason, this sometimes happens. Line 101 is supposed to be your total sales. So what you want to do is sanity check that your sales from your sales tax report matches your actual total sales that you would see on your profit and loss on your income statement. So that's a little extra sanity check that you can do. So my total sales are 154,449. And I'm just checking. Let me pull out an income statement for the same period for the first quarter of 2024. So we're pretending we're Michael J. Fox from Back to the Future. And it's fine. It's the same. I was using a sample company file that had information from 2024, but the dates are irrelevant. That's the end of our video. Hopefully you found it useful, and if you did, please make sure to like and subscribe.